Looking for the best opportunities in Perth property? Get the local area expertise you need from Momentum Wealth, WA's trusted property investment consultants. Market insights, advice and representation from award-winning buyers agents and REWA Hall of Fame inductees. Visit Momentum Wealth's website at momentumwealth.com.au to organise your obligation-free consultation today.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
All right, everyone, how are you going? Welcome to the show. Thanks for joining us as we navigate property and what is going to be, the people I talk to at least, probably one of the biggest number of years in property right across Australia. And I speak to a lot of people right across the ecosystem, a lot of people who are bullish, a lot of the bears, but all in sundry, most of them are saying if you got your money in property at some point in Australia over this coming period, you probably should do okay. Now, that doesn't mean you should be throwing your money around willy-nilly, chucking it in anywhere. There is still good assets out there and less than good assets out there. The less than good assets will probably be carried along by a market which is buoyant, but you want to make sure you're getting the biggest bang for your buck. So hopefully you're tuning to the Smart Property Investment Show, so you're helping to frame and shape your investment decisions. And property investors are in all shapes and sizes. Listen to this show, but also operating across the nation, from those who are starting out with one or two properties. And then you have guys that we have on the show here who have quite large portfolios that might have sort of 30, 40, 50 properties in there. Then you've got sort of more institutional operators who are in the business of creating very large portfolios with a number of different assets, some of the commercial, some of the residential, and they keep it or they sell it. So property investors of all shapes and sizes. What we're going to do today is sort of go towards the top end of the market. And I hope this is going to give some sense for how more institutionally orientated investors operate, those who are in the business of doing this. But there's a lot to learn from them as well. And I've asked James Paver into the studio. He's from a company called Avenor, and they sort of operate at that top end doing commercial and residential big build precinct type stuff, probably making new suburbs and all that sort of thing near railway stations. Is that you, James? Is that what you guys do?
Yeah, g'day, Phil. Thanks for having me. And yep, that's what we're into.
Yeah. Is it a good time to be in property?
Absolutely. It's there's a lot of change up, obviously. So when there's a lot of change and a lot of people looking for changing their current situation as a result of moving markets, it's a good time to be in it because a lot of opportunities crop up.
Yeah, and we speak a bit about on the Smart Property Investment Show to give some sense, if you're new to this, about 8% of all Australians, James, claim some sort of tax deduction as a result of being a property investor. So a lot of property investment conversations typically happen at that sort of inverted commas mum and pop type level, but then it sort of goes into more sophisticated investors and they will have quite large portfolios, whether it's resi, commercial only or resi and commercial. But then there's a whole new game, mate. There's a whole complete other game. And I'm sure people have heard of Frank Lowy and those sort of crews who are in the business of building lots of properties at scale. Most of it they sell, some of it they keep. You guys seem to operate in that level. Give me some sense of Avenor and what you guys do.
Yeah, absolutely. Well, it's funny you say that. A lot of the same principles at the institutional level still apply all the way down the spectrum, even to the mum and dad investors. And so there's definitely some lessons to be learned. But where we fit into it is we've come from an institutional development background, commercial, residential towers up and down the eastern seaboard, actually over in Perth as well. So we've got a pretty broad view of the whole institutional development market. And now that we've established Avenor about 5 years ago, and now we're deploying all that expertise on behalf of landowners, institutions, investors, but more particularly for tenants, occupiers, landowners, the sort of people who might not actually have the development expertise, but still are after a large scale development or the like. So we white label our team in and deliver that for them. And for the right thing, we'll co-invest as well. And at the moment, there's a lot of opportunities that are coming up. So it's pretty exciting times to be in it.
Yeah, it's all bubbling away. And hopefully we can extract some info out of you that people who are operating in this space, even at a smaller level, can learn from it. And what we're talking about institutional investing, people go, oh, what's that? That sounds, Jesus, that's pretty important in that. Most Australians in some capacity are probably operating in this space via their super fund. And super funds like plug-in money to get returns for their members into quite large-scale developments. A lot of it residential, a lot of it is commercial. A lot of super funds own big commercial buildings, right? And that's how they can generate a return. Yeah. So most of us have some exposure to this, right?
That's it. I mean, and a lot of the listeners probably wouldn't be aware that they actually do have touch points with this sort of space and they're involved in it indirectly. But I suppose that pool of money, the pool of capital that is being driven towards this asset class by the ever-growing pool of pension funds is one of the things that's helping drive the industry forward and drive it upwards. So it's definitely something to keep an eye on. And it's something that has been a pretty good news story for the last decade or so. Where we need to turn our eyes now is, okay, well, is that going to continue, and how long is it going to continue for, and what's actually going to drive that capital growth if, yields are actually going to start flattening out at the bottom end. So it's something to, keep front of mind. So in terms of being able to apply that to your own portfolios, I mean, it's still, as you start generating that demand for yield, it still actually flows down through the asset classes. So the mum and dad sort of investors who are looking to invest in commercial property, it still actually flows down to that end as well.
And COVID-19, I'm sick of talking about COVID like most people in Australia.
Yeah.
Has changed, no doubt, within your team how you're viewing commercial real estate or the type of commercial stuff you do participate in. Maybe office towers probably changed a little bit, but some of the logistical-based stuff or e-commerce orientated stuff, it's very different. But traditionally, James, why have, and we'll use it as a hook, why have super funds, institutional investors liked to park or build out portfolios that have some exposure to residential or commercial property? What is that?
Well, I suppose there will always be a demand for both of those. The thing that COVID's obviously thrown up in the mix is the demand for commercial property changing as a result of, less people being in the office? We're obviously still, interrogating that. You don't want to jump to conclusions, and I don't think there's a need to jump to conclusions. I sort of view the COVID impact in a couple of ways. One is in terms of the actual demand for office space, and one is the type of office space that we actually develop. And so in terms of the need for office space, knee-jerk reaction, everyone goes home. Is it that is going to be a permanent way that we work? I think there's going to be an element of that, but I don't think it's as much as, the office is dead, because there is a clear impact on people's bottom lines, businesses' bottom lines. So as soon as we can start getting people back in the office, generating that energy, generating the way that we do business and improve the growth of the businesses themselves and start generating a bit of white-collar employment growth, then that's going to come back. And so I don't think it's as simple as saying, okay, well, we're going to completely change the way we look at the need for office. In terms of the type of office, though, that's where we really do need to innovate a bit. Healthy buildings, the way that we design it, what is the appropriate spatials, what are the appropriate amenities that you include in a building itself versus in the precinct around. They're the sorts of things that we need to interrogate. The third one, which is where my head is at right now, is looking for that opportunity. What COVID's thrown up is changes in, for better or worse, the way that these occupiers, these tenants are doing business. Some of them are shrinking. It doesn't mean that they don't need space. It means that they might need to move. An investor doesn't mean that they need to sell the asset because they've got a debt call or whatever it may be. They need to rethink the way that they're actually going to fund it or reposition it. And so I suppose as developers, what we're looking at is, okay, well, what tenant needs to move and where are they going to move to, and how can we create that new space for them? Or for an investor, okay, well, what's their asset currently looking like? It's half empty. Well, actually, maybe it's better that we do a repositioning play right now. And then when we come out of that cycle in, 12 months' time after that repositioning, actually the market's a bit stronger. So I suppose it's tailoring those solutions for people's current, different individuals or firms or organizations' current circumstances.
Yeah, and I subscribe to everything you're saying. I think therein lies the logic behind, hey, have a look at how the big institutional players are operating in this space, because as a inverted commas, ma and pa investor, which is most, all those things still apply. Your product needs to be fit for purpose. Your product needs to be relevant to the people who are going to rent it. And if it's not, change it, evolve it, maneuver. You can change your cash position. You might be able to do some work on it to reposition the market. So all those things are just as relevant. You're just talking about precincts, right? So I want to talk about precincts because it's not a new thing by no means, but they're gaining a lot of traction, particularly in the large capital cities as the tentacles from the CBDs expand outwards. We'll just go to a break beforehand. Back in a moment.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with James Paver. He's from a company called Avenor. Hey, James, what sort of work do you do there? How do you describe your job?
My actual job, well, I'm managing director of Avenor, and so we've been growing pretty rapidly over the last 5 years. And so we've got a development business, and we're driving resi projects, office projects for a couple of big capital partner and a big tenant. And so as part of that, I need to make sure my team's performing. But on the other hand, I need to make sure that the machine's being, fed and the pipeline's there, and the relationships with all our capital partners and our tenant network is still fresh. So it's keeping hand in all the pies, that's for sure. And
how long have you been at this for? You're a pretty young bloke, It's what's going on there?
I started in structured finance with Investec and then moved into development with Leighton Properties. And so I kind of always knew that I wanted to start my own gig and run a development or an investment firm. So I gathered up all those skills. And then when the time was right, I kicked off this. I actually kicked it off with my business partner, Peter Clemisher, who's a bit of a veteran in the development space. And so we've been driving the growth of Avenor for about 5 years now. So
enjoy it.
We're very passionate. Yeah, mate.
Yeah, you got a smile on your face.
We love it. We love it. Yeah, it's good fun. You get to touch every part of not just property, but like the whole economy. You're dealing with tenants across, tech and health and education and services or whatever it is. And then you got construction, you got government, you got your mums and dads. You're doing a resi play and you're buying property off mums and dads or selling it. And so, it's a bit of everything, which is always exciting, keeps you on your toes.
And it's just all the usual stuff that every property investor deals with. You probably just got a few more zeros on most of the bills, mate. But look, you seem to have a spring to your step and enjoying it. Was there any period through COVID, and I think most investors went through this, whether or not you're sort of at that inso level or the sort of the lower grassroots type of stuff, where you went, what's this COVID thing? Like, oh shit, like, you got any of those sort of moments through COVID, or you've sort of, how have you stayed the course, mate?
Yeah, well, I mean, I suppose I try and think pretty rationally about these things when they come up. I think a lot of people jump up and down and jump onto the latest news, headline and run with it as fact. And so I usually stay pretty measured and look at the facts and try and, pivot accordingly. And so I suppose in terms of the way that the team was operating, straight off the bat, I wanted to make sure all of our guys were set up appropriately at home. We were doing all the right things in terms of their own health, but then making sure that their performance doesn't drop when they're working from home, but we're still trying to put together these pretty complex situations where you're pretty reliant on being able to deal with people, deal with changing circumstances, live changes in projects. And so making sure that everything gets set up with that. And then I jumped at the opportunity to get back in the office. I can see the huge value that the guys have, the team have from being face to face. And so that was definitely one thing. In terms of the actual market itself, I think we got lucky. We don't have heavy debt. We don't have a big exposure to market risk, I suppose, which was a big benefit for us. I think a lot of people get burnt in because they're heavy on market risk. We had a bit of planning risk, which really doesn't really get particularly affected by COVID. I suppose it actually goes the other way. Things get fast tracked through a little bit. So I think it was not such of an impact. I suppose it more looks forward for us to what's coming down the pipe and whether or not that impacts us when we do take on a bit more market risk. And my view of that is that, when you're creating bespoke solutions, that as long as you're, still staying innovative in the product that you're delivering, it's not too bad.
And we're sort of chatting about precedents before the break. Most investors, if they don't have some sort of exposure through some sort of investment vehicle into institutional orientated commercial property or resi property, their ideas of development would be at a top end, maybe building a block of 20 flats on somewhere or other, or doing some sort of townhouse development of sort of 10 to 15 places. That's like, for most people, the sexy end of, hey, like I'm in the big leagues now, right? But you're talking about precincts.
Yeah.
Tell us about that. Is it just all the same? It's just much bigger and more complicated?
Yeah, well, I suppose it varies a bit. I mean, I was lucky enough to chair the Future Precinct Summit at the end of last year, which had different speakers from precincts all around Australia, and so up in the Gold Coast and down in Adelaide and even in Sydney. And so we've had quite a bit exposure of this. I mean, Pete Clemenchamp, my business partner, he bid Barangaroo against Lendlease in the 2000s, and I helped drive the creation of the tech precinct down at Central Station. That's obviously got Atlassian as the anchor down there, and we've previously had a crack at White Bay as part of the tech innovation precinct the government were looking to put together. So we've always had this drive, and part of what we're going for with that is we like to be on the front edge of moving markets and creating markets. And when you look back at some of the projects that we've put together, we usually end up as one of the first movers. So in North Sydney, we did the Vodafone Tower, 40,000 square metre office tower, and that was the first office development in North Sydney for 6 years. And
Is that the one at the back of the post office?
Yeah, exactly.
Just I remember that.
Pack Highway. Yeah. So that's that. So we put that together, and it was the first. And so we sort of rode that market as that started coming back, and the institutions started coming up there. So Suntech bought that off us, and then through the delivery phase, there was 100 points of cap rate compression. Huge capital gain that they generated through the delivery phase. So by the time that Vodafone moved in, the building had already gained an extra 100 mil of value. And we did that by obviously identifying, there's going to be a huge volume of demand coming into the North Sydney market. Let's jump on that. And so other things like that. I mean, out of Parramatta, first stage of Parramatta Square with University of Western Sydney, and even, the Eclipse Tower, Steve Rayleigh in our team, he put together the Deloitte Tower out there, the first, proper office, A-grade office tower out there. And so, and obviously we've seen Parramatta change significantly since then. And so, that sort of thing, even in Resi, Ashmore Precinct, Urco was one that put together, and that was, the first stage of the Ashmore Precinct. In Bondi Aqua, that was the first Resi tower in quite a while. So now Tech Central, I mean, that's one we always knew we'd been working on putting a tech precinct together for quite a while, and, lobbying government, working with tenants, working with, different capital partners. We had a few cracks at it at a couple of different areas of Sydney, and then Central Station, in hindsight was the clear winner. It's all about the infrastructure. So, I mean, and that's probably something that really still applies down to, with mum and dad investors or whatever. Infrastructure growth, infrastructure delivery, that's where, property economics 101 is if there's the delivery of infrastructure, then there's going to be a progressive growth in the underlying, land value. And so if you extrapolate that onto a precinct basis, if there are big infrastructure projects being rolled out by the state government or whichever government it may be, there's, I think a few years ago, we started looking at this strategy generally. I think at the time there was about $135 billion worth of state and federal investment into infrastructure in New South Wales that was being delivered. And so we just looked at where that money was being spent and started targeting some of those sites because, inevitably it will result in growth.
And, in terms of investment principles, and that's relevant to everyone, but also for people investing in Resi, understanding where these major precincts are going in and the rationales why, new jobs being created, all this sort of stuff. But you said you chaired that summit around precincts. Tell me about the logic of precincts. Is that going to be how most developments happen now? They're going to be all inclusive of building areas which has, retail, entertainment, jobs, residential, all and sundry?
Yeah, well, I suppose the difficulty that we face is Sydney or any of Australia's capital cities, there's slowly becoming a limited amount of opportunity for creating precincts that are in core locations. I mean, you look at Sydney, Central Station, to create a precinct there's either over the top of Central or in the immediately adjacent land there where there's existing buildings. So a lot of these precincts are in the periphery of cities. It's either infill projects, which are filling in smaller pockets of opportunity near existing infrastructure. But a lot of these infrastructure projects are trying to extend out into remote areas or into the periphery of cities. As a result of that, you need to generate the demand. So to do that, you can't do a single office building and expect a tenant to come. You need to demonstrate to that tenant that there is going to be, retail, health, amenity, education, and that it's worth at least setting up an office there because there's going to be a population in the immediate area that's going to warrant it.
Where in Central is the new tech hub? Which building is it?
So it's just on the Western, it's called the Western Gateway. So near Railway Square there. And so in between Railway Square and the rail lines. And then the state government, the state government's having a look at opportunities to create a tech precinct in all of that area around it.
Yeah, that's pretty cool. And sort of back to North Sydney, which I'm recording out of North Sydney, I'm pretty familiar with it. So that Vodafone tower going in, like subsequent to that, it's a boom town here in North Sydney at the moment. They've just finished the Zurich Tower here. They've put, I think it's Lend-Lease has gone in there above on the corner of Mount and Walker. That's going up. Channel 9's just, and Fairfax have moved in just up the road. There's another big development happening. Just, it's all going on here. Like, if anyone's looking at this, have they missed the boat? Like, because it was a pretty sleepy town for quite some time here in North Sydney.
Yeah, no, we're big on North Sydney. We always have been. Like, we're out in our team with the Cisco building, 80-pack highway. Steve Rayleigh did that. 100-pack highways, an office building there that he put together. The Vodafone tower, but even like when the opportunities were there, we were looking at that Denison Street one, the 100 Mount we had a look at. But our Resi tower that we've got going at the moment is on near the corner of Berry and Walker, and a 30-story Resi tower. So there's a lot of energy and weight of demand for North Sydney for exactly the reason that you just said. It was just so sleepy for so long that pent-up demand and pent-up opportunity, I suppose, is what everyone's now turning to capture. So it's quite difficult to, run long-dated planning processes through that area, obviously. And so that's something that you need to be mindful of. But if you have the right partners and you can be patient, then it can yield a pretty good outcome.
And James, we'll go another break. When we come back, I just want to pick your brain on where you think market's going to go back in a moment.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with James Paver. He's from Avenor. He's the managing director there, and sounds like you're doing some pretty interesting stuff. So you're mainly just Sydney-based. You keep yourself geographically ring-fenced around that?
At the moment, we're focused on Sydney. We ran a big project up in Brizzy, and we had a crack at a couple more there last year. It was the Hurston Quarter Health Precinct with Australian Unity that we helped put together and kick off. And then over in Perth, we previously have done projects over there, but we're not particularly bullish on the Perth market at the moment. And Melbourne, we've also operated in, but we're not in a rush to jump in there in the first half of this year, I suppose.
No worries. So tell us about Sydney. Like, what do you see happening in Sydney over the next period of time?
Yeah, Sydney's interesting. I think it's a good time to be, I suppose, posturing yourself for making some moves throughout the course of this year. I think we've seen a lot of change last year, capital markets, tenant demand. I can't see it being a case of it going way further south. I think it's a good opportunity. If you've got the infrastructure set up to start looking at opportunities, scouring the market, then I think that's a good move to make.
And what's next for you guys? You're working on a few projects right now, but the smart developers I know are always thinking sort of 5-10 years ahead. So where do you like? Where do you think people should be thinking?
Yeah, well,
you're not going to give that away, are you?
Well, we've got a few ideas. I mean, you can probably, if you look at some of our pipeline, you can probably pick up where our thinking is at. Like looking ahead, like Mascot is one of those ones. I was talking about, where's the infrastructure going? Where's the opportunity? How can you be a first mover in a new market? I mean, Mascot has, it's got an office market. Yeah, it's got, some strong tenants down there, but with the delivery of Gateway, they call it, which is the road network connecting the, West Connect, the M5 near the airport, in between the airport and the city. I reckon, so we've got a precinct down that we're putting together, and it's going to be Australia's first 5G precinct. And 5G is pretty difficult to retrofit into existing office buildings. And so being able to supply that in an asset for tenants that need a rent rate that is, not the $1,300 a meter that you have to pay in the CBD, but is more affordable. That's something that I think that people are going to be looking for, particularly in the post-COVID era when, cramming all of your employees onto trains every day is potentially not the ideal solution. Having a mix of, transport modes to get people to work, having a healthy building, having a little bit more space. So I think we're looking down that path, and it's not something you do day one. A lot of this sort of thing, it takes a bit of time, but it's definitely in the pipeline.
All right. Well, no, thanks, mate. Well, I really enjoyed the chat, mate. I do like and enjoy chatting with people that operate in your sort of world. And, a lot of the stuff you said is just as relevant for smaller investors and developers and what it is for you guys, being a first mover in a new market, right? You can be that person. You want to be done and dusted before everyone else rocks up, that's what drives your prices upwards. So that's the secret to really good capital growth. But no doubt you're also really focused on yielding in these, how these assets are generating cash for whoever owns it as well. So it's a pretty important.
Absolutely.
What is it now at the moment? Is it more of is it a balance between both, or are most people sort of chasing capital uplift?
Well, I think it's pretty hard to chase yield at the moment because it's so tight. So it's sort of, it's pretty hard to, if you're kind of getting proportional margins over and above what the rest of the market is, proportionally it's not very big because it's so low to start with. So I suppose being able to take an opportunity when it's so tight to do the capital works you've been wanting to do, or do the repositioning, or shift the tenant while the building's half empty or whatever it may be. If you've kind of got the capacity to do that, then that's a pretty good move to make, I think, because I think the marginal difference in what your capital growth is at the moment is, it creates that opportunity to generate some value. So.
And is there much money washing around? I know the smart investors will park their money where they're going to get the biggest bang for their buck at any given time, and a lot of other asset classes aren't really yielding at the moment or delivering sort of huge uplift. Is it easy to find people who are happy to part with some cash to do some big stuff?
Yeah, there's a lot of money out there. I think I'm finding that Australia actually is in demand compared to other global markets. We're still having we're still talking with our international capital partners, and Australia generally is strong. In terms of office, I think people are spreading it thin across a few different asset classes, office being one where if they're looking for opportunity, then, they've got to take a bit of a longer view. They're not going to, buy in and make a quick buck this year, I don't think. I think it's that, you've got to take a bit of a longer view. And if you do, then I think there's a lot of money to be made. So.
All right. Nice one. Well, thanks for your time, James. Stay in touch, mate.
All right.
You're Sydney based, so no doubt I'll see you around town at some point. But mate, appreciate your time today and your insights.
Absolutely. No worries. Thank you very much for having me.
Nice. And remember to check out smartpropertyinvestment.com.au, social media, if that's where you get your info. Smart Property HQ, keep connected with what's going on in property. Quick favour for me, if you like what we're doing here, please keep those reviews coming wherever you listen to us, whatever platform. Most of you are on iTunes. The team here get a real kick out of it. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.